But joining me now to talk more about this and other market moving news is Markets Ranger. He is the Regional Vice President of Ameriprise Independent Advisors. Marcus, it's a pleasure to have you in studio.
Thank you.
What's your pulse right now? What's your pulse on the economic data that we've seen investors digesting the rest of the week and what we're seeing currently in the market?
Yeah, I mean, I think that there's an opportunity for the retail investor right now, and this is important. It should be controlled confidence in the way that we approach things. Confidence because coming into this year, we've had solid corporate profits. We've had inflation coming down. We've had the prospect for growth in all sectors. All of that bodes really well for the retail investor, but it should be controlled investing because we're coming off of a year we had 12 months of uninterrupted growth in the markets. And then you have some global instability. You have tariff actions, which is always the wild card. So I think it shouldn't be a shock to anyone. We're seeing some recent volatility in the markets, but it should be controlled, confident investing. So really three rules. One is high quality investments in high quality companies, strong fundamentals, strong leadership, strong product. Number two, it should be rebalancing. When we do see this volatility, we should rebalance, take advantage, things are on sale, and have some rebalancing in the portfolio. And number three, when the markets do drop, instead of running from the markets, instead of pulling money out, we should be investing more if you have money on the sidelines. So it's controlled, confident investing are the opportunities right now.
What are some of the high-profile, high-value companies that you're eyeing?
Well, that's a really good question. What I would say, the broader concept, I think, is to really look at what the market is going to do. I think that we're coming off of 2 consecutive years of 20% plus real returns.
Yeah.
That is abnormal. We haven't seen that since 97, 98. So I think we should expect that there'll be a different volatility that we'll see in the broader market, and what advantages or opportunities do we actually have there. You have absolutely global instability. You have the tariff actions that do actually exist. We're going to see volatility, but on the flip side, you do have strong profits. You have all 11 sectors of the S&P 500 are boding to actually have positive returns. And then you also have some very differentiated factors this year. You have potentially reduced taxes. You have potentially a business-friendly Washington administration. You maybe have some deregulation. So you could see very positive markets that have a strong end to the year, higher than we are right now, but with volatility. And I think you should look at opportunity there.
And it's interesting that you mentioned, 97, 98, how the market dynamic has shifted so much. I'm interested to hear your take on how investors' strategic moves have changed with the ever-changing market conditions that we're seeing today.
Yeah, I think that it's also looking at strategically the broader economy that also drives some of those decisions and how people are going to invest. I think we should be really encouraged by our economy right now and the outlook of our economy. If you think about the last 2 years, we've had some headwinds and uncertainty that the economy has been really resilient despite those actual things. We saw economic growth be just under 3% last year. Our economists, talking to them, we might be just over 2%. And I think those can drive strategic decisions in the market as well. We got to pay attention to the job market. The job market, low 4% unemployment. That should be sustainable through 2025. Economic fundamentals are really sound, so we still got upside there. But again, the wild card is tariffs, and I think that's going to impact people's strategic decision as well. It is the most known unknown out of everything that we're actually looking at and dealing with right now. Now, it could be temporary. Maybe it's just a negotiation tactic with our trading partners, but if it's long-term and actually implemented, that's going to have an impact on strategic decisions people make, because we have to look at the outlook and impact if those do go into play. But overall, I think strategically people are looking at the economy as well to make good decisions.
Well, speaking of things to look out for, PCE obviously is in full focus coming out on Friday. Yeah. All eyes are going to be on this. This is the Fed's preferred gauge on whether or not or when to lower those interest rates. What are you anticipating from these results?
Yeah, so I think inflation, it's obviously been a hot topic the past couple of years, without a doubt. But we've made notable progress, but it's still been sticky. It's been sticky. Summer 2022, we were at our highest. We were over 9% of inflation. End of last year, we got down to 2%. So it's come dramatically down, no doubt, but it's been sticky. As we got to January, it ticked back up 3%. So I think we got to pay attention to it. There's going to be this data that's coming out the end of this week, but as well as the middle of March is going to tell us more and get more information to determine the path. But I definitely think the sticky inflation has confused things recently.
But how will that impact the Fed's path moving forward?
Yeah, so I think Well, interest rate cuts. I think that coming into this year, the Fed, as well as the market, was thinking there'd be another interest rate cut cycle. Maybe 3 or 4 interest rate cuts were built into the market pricing. But with the sticky inflation and also I think the looming tariff wild card, which plays into it as well, I think the Fed is saying, hey, we got to keep our head on the swivel. We need to take a pause. We need to be cautiously optimistic and just take a look at how we can mitigate or manage the risk of inflation with economic growth and make a different decision. So I think they're going to take a pause and get more information.
Do you think that there are any factors that could delay the rate cuts?
I think that the information that comes out this week on inflation as well as the middle of March could, as well as we've already seen the sticky inflation in January. And that's what the Fed is going to be paying attention to make sure they can make the best decision. They got a hard job, but I do think that information, they need more information right now in order to make the best decision.
And how will rate cuts impact both equity and bond markets?
Well, I mean, if you see with anything, I mean, we have interest rate cuts. If we have more cuts, then we should see some lift. We normally will see some lift in the markets about how people are going to manage and make decisions about how they invest.
A lot to look out for. Thank you so much
No
for
doubt.
joining me in studio. Again, Marcus Ranger, he is the Regional Vice President of Ameriprise Independent Advisors. Thank you for joining us.
Thank you, Trinity. Appreciate you.